Hey traders, how are you? Vladimir Ribakov here from Traders Academy Club, and welcome to the weekly Forex forecast for the week starting on 11 to the 16th of November. So first of all, before we begin, thank you very much for your time watching this video and the rest of my videos. I hope you enjoyed it and I hope you find it helpful for your trading plan and for your trading ideas. That's the whole idea of these videos. If you are watching this video for the first time, so welcome to my channel. Below the video you have the subscribe button, and don't forget to get the ring button on for notifications. If you enjoy the videos, as every week I have a request for you. Please show your support back, hit the like button, drop some feedback on the comment section. Just let me know what do you think about the video, what do you think about the opportunities, and what do you think generally about the ideas I share with you. Your help, your support, and my personal and my team motivation, of course. Below the video on the description and also in the comment section, you will find the invitation to our totally free Telegram channel. So just join that, and what we share on the channel is trading ideas, trading setups, trading videos, education, strategies, webinars, and much more. This channel is completely free for the community, so you're very invited. The invitation link is right below the description. And the last thing, on Monday we will publish once my team finished to prepare that, we will publish the weekly forecast PDF format. What does that mean? That means very simple. Let me just open it. That's the previous week, and we have the video right now, and on Monday, once we finish to prepare that, we upload the PDF format, which means a summary of the video. Okay, everything is here detailed for you, so just for you, easy to follow, and to keep it simple, very clear. So on Monday we publish that. You can find it on the comments below. I will put it on Monday. Normally it's Monday afternoon my time. Then you can also find it on the description link below the video. If you are in the newsletter, then just follow up for my emails, because I will email that as well. So let's begin. This is our previous week. What we do is, as every single week, we go over our ideas from the previous week to see what worked, what failed, what did not trigger, and what changed. Because the market is very sensitive, you know. Sometimes you have an idea to look for sales, it never triggers, and then we have to look for buys. Basically accepting the change of direction. The market always changes directions. We have to adjust. And my personal goal with my videos is not just to try and predict, because we're not dealing with predictions, we are dealing with facts. We trade facts. If what we plan happens, we trade. If what we plan does not happen, we don't trade. Very simple. My goal is very clear here, to show you that you don't need intraday trading for successful trading. You can do it medium term, from week to week, or longer term even, as some of our opportunities. And basically to show you that the idea is the same. You make a plan, you make your forecast, you make your analysis, you plan your trade, and then you trade your plan. And this is what we do week after week, following the setups we are talking about. So this is the previous week, which you can find, of course, in the previous week video. The euro dollar, we wanted to see. Let me just open the virtual pen here. Okay, so for the euro dollar, we wanted to see one more push down towards the area of 111, 110, and start looking for buys there. And this was our plan, to get the second wave push, and once we get this divergence, start looking for the sell setups. And this is exactly what happened. We got the two waves as we wanted, we got the bearish divergence as we wanted, and we get the move down, right? So once again, this is the plan and this is the current market. What do we do from here? The pressure is still bearish. Weekly target was and remains still 111, 110. Daily does not offer any turnarounds as for now. We do not have a new structure of higher highs, higher lows yet. So it's pretty much simple idea, still sell the rallies. I would say that invalidation stays right here at this moment. Invalidation means if it breaks above this area, the sell idea becomes irrelevant. Until it is, it means we can still look to sell the rallies. And for all those of you who are in a sell already based on the previous week idea, what I love to do in such cases is first of all guarantee that my trades will not become a losing trade, meaning stop loss to break even or even partial cash out if there is enough risk reward in a trade taken already. Partial cash out guarantees you end up with a profit. And for all those of you who trade pure statistics, stop loss take profit, what happens happens. There is no reason to change any of the holdings currently. Next one on the list for us was the euro versus the pound. The idea was the same, rally and sell. So this is where we got, right? We got this little rally and sell continuation. What does change for the pair? That currently the daily chart triggers a double cycle, which means here and here the divergence ticks up. This is a beautiful engulfing pattern right here, meaning a short-term corrective cycle could begin. The daily is a double cycle with a divergence, so 4-hour chart should provide a corrective cycle. 4-hour chart would could look like one of the two options for the cycles. That's two waves correction or a range. Range could be anything. It could be triangle or a channel or a flag or you name it. Okay. The idea is very simple. So we could see now here 1, 2 before the sell continuation, or we can see that dancing in some ugly move like that before the sales continues. The best idea, of course, is still to sell the rallies, but for all those of you who like to try and play aggressive, the daily chart suggests the condition that could fit in corrective cycles. You can also see that during the week we got a 20 candles right on the Bollinger Bands. This is the tactics and techniques I use from my Divergence University course, and we basically expect a bounce to the upper band of the Bollingers, maybe even slightly higher, and it fits in the short-term corrective cycle idea pretty much perfectly. So that's for the euro versus the pound, and yes, it could try to make a new low, but there is a good chance we are going to see here a lot of fight. So drops could provide even now. As for now, we are bearish for 3 weeks now in a row after the setups we got. So now it's time for possible corrections before we are looking to sell. And for those who don't like to play aggressive, only conservative, sell the rallies. Was and remains the best plan. Next one in our list is, by the way, before I continue, very important to note, I cover here in this video the best opportunities as I see them for the beginning of the week. Which means, simply, if something is not here, it means for me, for the beginning of the week, it's not so clear. During the week that might change, and that's why in the Traders Academy Club I follow up everything, every single instrument, day by day in the live trading rooms. Okay, that's because it could go and change during the week. If you have anything specific you would like to trade, first of all, let me know in the comments. I'll try to help. Second, in the Traders Academy Club, if you're not yet a member, that's exactly what we do. So you might consider this is the place for you to get these ideas day by day. Aussie franc was our next pair we were looking to trade, and we wanted to see a false break happening in order to start its sell journey. So here we are. We got the, let's go back here. All right. So here we are. This is our plan around the 100 level or 161 level. Look for the false breaks and the retraces. And basically this is, what is the 4-hour chart here? This is exactly what happened. We got a false break and it failed. This false break never provided for us the lower low idea to start basically gaining the reversal, and the false break by itself simply failed. So what is going to happen from here? On the short-term view, we are still here facing a bearish divergence. So yes, there should be a corrective cycle, and it's very likely to start from the current zone or maybe slightly higher after the visit of the 161.8. So for the short term, there is a very good possibility that we are yet in the corrective mode. Now, if we take a look here on the 4-hour chart, it fits in with its triple cycle. So yeah, the short-term corrections might begin. It could happen this way. So sell the rallies on the short term, even if we get a new high, so something like that, right? That still could go and provide us the sell opportunity further. So on the short term, sell the rallies is still the plan. However, on the long term, we might be changing the view for a bullish run, and I will explain. According to the very long term, we have a triple cycle. This is the monthly chart. So we expect a corrective cycle, which means 1 and 2 or a range. If the weekly fits in this structure, we might be talking about the rally to begin right now, right? And the weekly, basically, this is what it suggests. If we ignore the spike, this is what we face. If we include the spike, this is what we face. Triple descending cycle with the same top, and basically a double wave correction. Now, the only problem I had with this scenario is that this low was never finished with a ending divergence, and that's normally trickier setups. It also did not happen clearly on a daily chart, and that's why I like such opportunities less. But because of the monthly and because that it is creating here a possible bullish hidden divergence, that's a place where we might see that turning a little bit around and then continuing higher. It's too early right now to switch that for buys for long term, but it's a scenario we need to keep in our mind, because if these corrections, this area turns to be small and two waves with a bullish sign to continue later, we would be looking for further buys. Well, it will take several weeks, but this idea is important to remember, because you know, when you remember the big picture, you know how to refer to the short picture, right? Short-term picture. And this is basically where the Aussie franc stands right now. So the aggressive idea we had from the previous week failed. However, the levels still hold, and we might be looking to sell the rallies still if they are in a valid setup. Pound versus the Kiwi. Our goal was short-term rallies for sale, and we wanted basically to see the corrective cycle happening. Pound Kiwi, here we are. We got the rally. Short-term, it was a two-wave structure. Blocked with the bearish divergence, and here we are in a continuation. So what happens with this pair right now? It continues its bearish run. Currently the 61.8 might look like a possible target, meaning around the area of 190. Short-term pullbacks could still happen, but as long as this stop holds, this is our invalidation, because that brings us to the, as daily developing the two waves, that brings us to the 4-hour chart cycle to look like that. 1, 2, 3, 1, 2 correction, breakout, and this now starts to be like a continuation. So that's why we have this invalidation plan here. That's why we have this invalidation area zone. So as long as it is below, the plan was and remains sell the rallies. New Zealand versus the dollar, we were expecting to sell the rallies from the top of this possible range, or by completing the next final rally on the 4-hour chart. That was the area of closer to 0.67, 50, which is where we are right now. So we got the 4-hour chart rally as we talked about on the short term, right? Here. We got this rally. We crossed the last highs. So what happens now? According to the weekly, the pair is still bearish, and now develops the bearish hidden divergence. The daily chart, though, does not have any ending divergence part here, and that could still be the case. So from my point of view, the New Zealand dollar is, which is now dancing around the structure of the 161.8, should remain in play here. It could fight here to create a new high, maybe with a false break, or simply dance around before it gains its bearish momentum. So dropping to the 4-hour chart, we could easily see the pair fighting in this area before making the next sell, or even ideally trying to push that and complete a special cycle. So try to push this area maybe even slightly higher before the next takeoff for sell. So my personal view, it's the zone is great for New Zealand dollar to start looking to sell. Ideally, with the daily to create a new high. And of course, we should remember the false break scenario, which we have from the previous week. And that means if we false break it and close below this broken high, then it simply would be a structure of sell the rallies by itself. Okay, so the short-term rallies we wanted to see happen. Now it's time to look to return to the longer term and look to sell the rallies. Our next pair was the Euro versus the Kiwi, which we wanted to sell the rallies as well. Where is that? Here. And the thing with the, where this line come from? The thing is with the Euro versus the Kiwi that it never managed to give us the rally to go for a sell. It was holding and fighting this area that we had on the previous week, right? And simply continuing lower. And that's what we were talking about. If we break below this area, we are heading towards the 166, right? This was our zone. And as we marked here, if we don't get the reversal, right? So, and we clean this area, we are heading towards the 166. And this is pretty much what is happening right now. And I think the Euro versus the Kiwi should reach this area, the critical zone, should slow down with the divergence here, start to create it before its reversal to take place. So this drop is here and here to remain. And if we get corrections, they are still for sales. So for all those of you who are involved in sales with the break of this area that we've been talking about, it was around the 170, you should be good now. And as I always say, such trades don't let that turn to be losers. Partial cash out or at least stop loss to break even to make sure you are not catch by a surprise, and market sometimes can surprise. So Euro Kiwi was and remains bearish for us, all the rallies. Aussie dollar, we wanted to see drop and buy, and it worked perfectly. Here we are. This was our drop, and this is the buy. So what happens right now, because of the weekly divergence, we're still expecting daily to be corrective cycle, which means daily could still perform as 1-2 or still dance inside the range. It doesn't change nothing for us because currently we are after buy retraces. So daily completed the first leg, 4-hour chart confirms it, but by making a triple cycle. We require a corrective cycle right now, which means 1-2 by ideal before the buys, or it simply can provide us a false break and some kind of a range, and then we will be looking to buy the dips of the range. So the Aussie dollar was and remains, it was beautiful bullish previous week and paid amazingly. It's like 100 plus pips here. Now it's time for corrective cycle. The corrective cycle could be 2 waves or a range. Once it's done, time to go back for buys. New Zealandian franc The idea was to look for sells around the 161.8, and this idea completely failed because we crossed through the level without ever being able to complete a turnaround. We never got the lower lows, we never got any trend and breakout, we never got any idea here for the reversals. So this idea of sell around 161.8 completely failed. And here is the thing now. Remember the Aussie franc which I explained before? Here we go. Same with the New Zealandian franc. We are at the triple cycle here, which means with this divergence, which means we are in corrective cycle. That could be two waves or a range movement here. If the weekly fits in, and it does, by making a triple cycle and double wave correction, it should now continue higher. Now the ideal thing I wanted to see was to get the correction here, one more low, to complete the divergence here, and then fly. That would be the ideal scenario. Not always market follows our predictions and our expectations, so sometimes we just need to adjust. And the Kiwi versus the franc has this adjustment area exactly now, because it had the double wave correction, which never broke down, and instead of that, it creates 1, 2, 3, 4, and a bullish breakout. This is normally a direction change pattern, and that means we are now in a long-term bullish run. So the sell idea that I had before becomes now invalidated. So what should happen on the short term? This is the current leg that we have. Very likely it will develop something like that. So the short term, we are looking on this leg, and this leg suggests us a beautiful area of the 161.8. We need to confirm that each of these legs is a cycle by itself. First leg is a cycle, second leg is a cycle. We are now requiring a corrective cycle. So if we get 1, 2, or if we dance in a range here, we can be talking about further buy continuation. So short-term retraces should happen. Once they happen and supported by the bullish setup, two waves or a range for the bullish continuation, this is the time to go for a buy again. So you see at the beginning of the video I told you this is very important to be able to adjust your plan and your expectations to the current market conditions, not to marry your position, right? So I was looking for possible sells. I never got any validation for a sell because it was a straight rally without turning points. So, which is lucky, of course, because it just prevents us to make losing decisions, losing trades, losing setups during the week. But now the idea is invalidated and we need to adjust. So in order to adjust, we need to go to higher time frame to check the roots of our analysis, our expectation, and to adjust the plan. And this is what I wanted to show you this week. Next one is the dollar versus the franc. We had the sell the rallies plan with another false back on the 4-hour chart or 1-hour chart, two waves to be created. So this was the case, right? 1, 2 on the 1-hour chart, and this is what happened. 1, 2, and the second leg, right? So pretty much following our expectation. So we got the two waves, we got the divergence, we got the turning points by making this divergence, right? And by starting creating lower lows, lower highs. Also trendline was broken, of course, here, and the idea becomes bearish. What's next? Now honestly, I would be very careful with the dollar franc right now. It's a fighting zone. I think we are going higher. The pair looks like it wants to go to 102, 103. I would be a bit careful here. The daily still faced with some divergence and a 20 candles ride, which is tricky. The last time we faced a 20 candles ride, it was here and it reacted pretty serious bearish. So it could last here slightly longer, but rally is still to be solved. That's how I see that. Yes, we can get that towards 103, of course, and basically with aggressive approach, as long as this low holds, with small risk trading, I would be looking here for buy continuation towards 102, 103, but very careful. with smaller risk, as the daily does show some possible stoppage signs. Pound franc, our goal was bullish to get the rally, and here we are. We got this correction as we wanted, and we got the continuation. So what's next for the pound franc? Long term still suggests very likely for buys, but the short term daily already provides a divergence and a false break, meaning we are in a corrective cycle. So what we will be wanting to do here is to short term sell the rallies. We expect a corrective cycle. That means 2 waves down, or at least some kind of range with more false breaks to happen here. So pound franc, which was bullish and paid beautifully, now becomes short term bearish, which means looking to sell the rallies. Aussie versus the Kiwi. We wanted to get the setups on this low or a new low if it is created. So 4 hour had to create 2 waves, and this is what 4 hour chart right now is doing. So we got this wave, right, and now it's building up the second one. So once we complete here and a bullish divergence comes, this would be the time to look for buys. That's for the Aussie versus the Kiwi. New Zealandian CAD, we were and remain bullish. Our plan was buy retraces, and it paid off amazingly this week. Here we are. So what should happen right now with this pair? Daily suggests now the level of this cycle to be reached. We are going to start and face fight. This is the area where rallies should be looking for possible sell-off. So yeah, it can play around the 089, 090 zone, of course, but I do expect fights. I do expect retraces. So the daily chart suggests Bollinger Band duplication area here. 4 hour chart suggests 20 candles right, more than 20 candles right. Last time it was opposite, 20 candles right here and here. You saw both the reactions. It was pretty crazy. You can see the Bollinger Bands right here. It is marking for us 20 candles right. It's a indicator of mine which I use, which means we are now in a critical zone where we can expect corrections to begin. So Kiwi versus the CAD. On the short term, it can try and make new high. No problem with that, because once this new high created and we have the divergence on daily and the 4 hour chart, it is sell time. So Kiwi CAD, for all the trend riders of you who enjoy that, it's time to cash out. Partial, let the rest run because it still has some room, but new highs with turning points should be considered as a possible sell opportunity. Short term, for long term, it's still bullish. Sugar, we are after second leg down and buys, and this setup so far following what we planned, and now we have the second leg. So what we want to do is these 2 waves, we got a breakout. We want to see the higher highs to be created. And bullish setup. Next one on the list was natural gas, and we are bullish as long as this low holds. And natural gas, my friends, turned to be one of the biggest payers of all times. Look where we stand. This was our hold, right? As long as we hold. Look where we are right now. So the trend lines were broken. This is what we call a classical risk reward. Amazing. So what about to happen? Daily starts to show. Daily starts to show some possible highs now. Levels start to be critical. Divergence starts to pop up somewhere. This is very likely to be some reversal place. So for all those of you who are long, time to make the money. Time to cash out. At least partials, and make sure you do not lose such a winner. Short-term returns could happen. For long-term, I'm still very bullish. I expect this, as you know, I told it not once. So retraces are still for buy here for me for long-term. Short-term, though, could provide the retraces. I wouldn't trade them. I would cash out and look for retraces and buy again. DAX, we wanted two waves to look for sell. Here we are, the two waves are in creation. So from my point of view, we can start looking for sells, and that's to happen from here or slightly higher. No problem with that, as the divergence starts to happen and build up. Sell the rallies is still the plan. By ideal, I do want to see one more high, by ideal, and daily to turn bearish hidden again, and then massive sell. Not sure if we will get the ideal, so sell the rallies is the massive plan. New Zealandian CAD, Nasdaq, sorry, is the same. We wanted to see the 4-hour chart, two waves, and a bearish divergence to develop. It is exactly what happens. So we are back to sell. Okay, sell from here or slightly with new false breaks, sell the rallies was and remains our plan. Next one, pound Aussie. We wanted the two waves for a sell, and exactly like we wanted, it happens. So we got that, right? The setup of the correction, and we got the continuation. For us, pound Aussie still remains sell. The target we will be aiming here is 1676 area. Invalidation zone would be, of course, this high. So that's what we expect. If the invalidation area triggered, it will not change the plan. We will just be looking to sell from higher. So that's for the pound versus the Aussie. So far, working well. Oil, we wanted to sell the rallies. The issue with that is we never got the rallies yet. So no new sells could be in play. What should happen with the oil? Well, we are now long-term sells here, as you can see, and this is a straight move down. On the 4-hour chart, we start to see the divergences. We do want to see the structure of higher highs from here or from here after a false break or two more false breaks. But the higher highs must be there so we can go and talk about buys. As for now, it's not there. Game over. No setups. Because the idea was to sell the rallies. We never got a good rally to sell yet. So we can work with that. Euro yen, we wanted to see the 4-hour chart making two waves and sell. Euro yen so far following beautifully. Right, this is our zone and we are in a sell. For me, it remains bearish. This is the invalidation. So for me, it's still bearish, and meaning sell the rallies. This is the plan, right? So still bearish. Now, of course, as I always say, don't let winners turn to be losers. Stop loss to break even. If you got a good risk reward already, you don't want to face the situation when you had a winner and then you wake up and, oh my god, how did that become a loser? Sometimes the market surprises. We don't want to marry the ideas. We want to manage our ideas correctly, the setups. And once you have a winner in your hand, do not let it turn to be a loser. Now, there are some pairs which I did not cover simply because my view about them is not clear. If you have anything specific you would like to ask, drop me the message in the comment section so I can give you my idea. Of course, as I said before, if you are up to the short-term trading and with all the setups, I invite you to the live trading rooms in the Traders Academy Club. The invitation link is right below. One last thing, as the Black Friday is coming and approaching, we have a unique Black Friday offer. Not only Black Friday, it's also Cyber Monday and the holidays, but this is the end of the year period. We have a very unique offer to all the projects we have and we are involved with. And if you are interested to take a look at that on below the video, in the comment section, there is the offer of the Black Friday. Just click the link and see if this offer suits you and is interesting for you. If no, simply ignore. And that's all. Once again, thank you very much for watching. Don't forget, if you enjoy, hit the like button, Drop some feedback below. Your support, my motivation. I invite you also to join us in the free Telegram channel link right below in the description and inside the comments. So thank you very much for your time watching this video. I wish you a wonderful trading week. I am Vladimir Ribakov, Traders Academy Club. I'll see you soon.